Good afternoon and welcome to today's RE Royalties webinar on growing our clean energy future through royalty financing. We thank you for taking the time from your busy schedules to learn more about us. My name is Bernard Tan and I'm the CEO and co-founder of the company. Joining me as well on this webinar is Peter Layton, COO and co-founder of the company. First, as we are currently in the process of taking the company public on the TSX Venture, I would like to point out some regulatory information and forward-looking statements contained in this presentation. If you would like more information, the contents of this presentation will also be posted on the Front Funder website and also our website after the webinar. At RE Royalties, our company's vision is to create a lasting positive environmental impact by investing into a clean energy future and providing exceptional returns for our shareholders. Our goal is to create a company which focuses on the triple bottom line: people, planet, and profit. Our business model allows individuals to participate and invest in the growing clean energy economy while generating strong returns, a stable yield, high sustainable growth, and strong protection of capital. Our company structure is set up so that anyone can invest and participate in this vision. Our focus is to help small to mid-sized renewable energy operators and developers grow their business. These small to mid-sized operators are entrepreneurs who have lots of great opportunities and want to grow their renewable energy business. However, historically, they have been underserved by traditional sources of financing in the debt or equity markets due to their size. Current financing alternatives for these small to mid-sized companies, unfortunately, are limited and not always ideal, and consist of one or a combination of either 1, selling their assets, 2, diluting their ownership position, 3, ceding control of their company, or 4, take on very restrictive debt. Any one of these alternatives can also be quite expensive. Our solution is to provide royalty financing to help these companies grow. Royalty financing is a well-proven and innovative financing solution already utilized in other sectors such as music, pharmaceuticals, agriculture, restaurants, oil and gas, mining, and technology. It has a lot of unique, cost-effective, and flexible features, which are advantages to our clients in growing their business and contributing to the future of clean energy. We are currently the only royalty financing provider to the renewable energy sector, and our solutions are beneficial to our clients because we align our long-term purpose with them. Royalty financing is able to offer the following benefits to our clients. 1, it is much more flexible than traditional debt because there are less restrictive covenants, which provides the flexibility needed for our partners to grow. 2, we receive an economic interest in the project rather than an equity interest, which means it is less dilutive for them and they don't have to cede their ownership position as they grow. 3, we do not require control of their operations and our clients are free to operate their assets in the best way possible. Furthermore, they don't have to sell any assets to raise money, which is counterintuitive when you're growing a company. 4, unlike traditional banks, we don't charge our clients any fees. Our clients do reimburse us on the cost of conducting due diligence, but otherwise our returns from the royalties are linked to the long-term success of their projects. To give you an overview of how large the renewable energy market is and the potential market opportunity we are currently in the past 7 years, over $2.2 trillion have been invested. More investment is made each year into renewable energy sources compared to traditional carbon-based ones. This market continues to grow exponentially each year, especially with the coming electrification of transportation and the increasing growth demands in the electricity grid. Energy technology continues to improve year over year, which drives the cost of generation down. In many places, renewables can generate electricity at a cost lower than carbon-based fuels, all without subsidies. These macro factors, along with ongoing improvements in technologies such as storage, will continue to drive the emergence of renewables in the near future and over the long term. So how does royalty financing actually work? First, we provide an upfront payment, usually in the form of a loan, to a renewable energy operator or owner. That operator then used the loan to either acquire, build, or expand their asset, such as a solar park or wind farm. We then receive a percentage of the revenues generated, called a royalty, over a contracted time, usually 20 years or more. This period usually represents the useful life of the asset or the length of time when the owner is contractually obligated to sell the electricity. As long as the renewable energy project continues to generate and sell electricity, we continue to receive our royalty revenue payments. I'll pass it over to Peter.
Thanks, Ryder. Hello, everyone. Slide 9 basically walks through our value proposition to investors. This is how we grow your investment. Our most popular product involves a short-term 2 or 3 year loan coupled with a 20-year gross revenue royalty. This product aligns with our clients who need short-term financing to acquire or complete a project. From our investors' perspective, we earn interest on the loan, and when it is repaid, we receive 100% of our capital back. But the royalty we created stays in place for 20 years. During that 20-year time span, we can deploy the same capital 7 times, assuming 7 different 3-year loans, and we can create 7 separate royalties, all from the same initial investment. This is what recycling capital looks like graphically. So if we start our first investment, we create 1 royalty stream. We get repaid that investment. At the end of 3 years, we reinvest, create a second royalty stream. And again, in year 3, and again, we are able to do that multiple times, so that over that 20-year period, as I say, we've created 7 different royalty streams using the same capital. This is really how recycling capital unleashes the power of compounding. And at the heart of it, that's our value proposition to our investors. In terms of where we are today, our current royalty portfolio is comprised of 11 royalties covering 6 solar projects, 3 small run-of-river hydro projects, and 2 wind projects. The total capacity of these 11 projects is 473 megawatts. That's about half of the BC Hydro Site C mega project that's currently under construction, for those of you who are familiar with the BC market. Cumulatively, this is enough energy to power approximately 116,000 homes per year and to displace approximately 300,000 tons of CO2 on an annual basis. From a royalty revenue perspective, approximately 51% of our revenue is generated in the United States, 38% in Europe, and 11% in Canada. Approximately 73% of our royalty revenue comes from solar projects, 25% from wind, and 2% from run-of-river projects. We've only been in business for 2 years, and we're already making a profit, helping our clients achieve their growth targets, and making a positive environmental impact. What I'd like to do now is walk you through a few before and after case studies so that you can understand the value proposition that we deliver to our clients. Our first client, a small wind developer in British Columbia, who happens to be a former competitor of mine, owned an existing royalty on an operating wind farm in northeast British Columbia. The project had been in operation for 4 years and it had 21 years on its revenue contract with BC Hydro. Our client had a new development opportunity that needed funding, and when they tried to borrow against the 21-year royalty, traditional banks failed to recognize the fair value of their royalty. We were able to recognize the value our client owned, and we bought out the royalty for an upfront payment that was approximately 4 times the value traditional banks were willing to lend. Our client was able to use the proceeds of our financing to invest in a minority interest in a new development project that is due to reach commercial operation this year. We are already in discussions with this client about writing a second royalty on this new project, allowing our client to finance a larger working interest in a third project he's working on. Flexible royalty financing has allowed our client to continue growing, which will in turn provide us with an opportunity for us to grow our business. It's a true win-win. Our second client is a publicly traded independent power producer based in Canada who had an existing portfolio of operating projects in Europe, 3 run-of-river hydro projects, and 2 large solar parks. Our client had the opportunity to double their capacity under ownership through the acquisition of an operating wind project that was in excellent condition and that had long-term contracts for its electricity sales. Our client's share price was depressed, meaning that issuing equity would have been incredibly dilutive, and traditional banks were only willing to lend at very expensive rates with very inflexible terms. Our short-term interest-only loan allowed our client to purchase the 6th project, doubling the size of their company. Cash flow from the new project will enable our loan to be repaid in 3 years, and we will maintain a royalty on all 6 of their projects for the next 20 years. Subsequent to closing our transaction, our client acquired the 7th project, doubling their capacity yet again. We are currently discussing increasing our loan in return for a royalty on the 7th project. For this client, flexible royalty financing allowed them to double the size of their company, and we have an opportunity to increase our royalty as they double in size again. The third client is a small European family-owned business that has a global footprint developing, building, owning, and operating solar parks. The client was developing an enormous portfolio of solar projects in Texas, where they had first mover advantage on some excellent sites. They were running short on capital as the development moved along, and it became necessary to post letters of credit to secure interconnection for their projects. Our client was faced with having to sell some of their babies in order to fund the continued development of the survivors. Traditional banks were unable to help. Our solution enabled our client to maintain a large proportion of their portfolio, and they have been able to keep the projects on schedule and are anticipating having the projects ready to build by the end of this year. We were able to attract co-investors to invest beside our client, and we were also able to secure a 20-year royalty over the full 332 megawatt portfolio. Our client continues to pursue growth in Texas, Alberta, and Europe, and we are continuing to work on royalty financing these opportunities. For this client, innovative royalty financing creates a true long-term partnership. We help them grow their business, and their growth provides us with an increasing opportunity to grow our business. In terms of our growth prospects are very strong. We expect to deploy our current raise of $10 million in the next 2 to 3 months by creating new royalties with existing clients. And we have a backlog of new prospects that will allow us to deploy a further $100 million over the next 12 months. As Bernard has noted, the global renewables industry is growing rapidly, and the cost of generating electricity using renewables is decreasing dramatically. Meanwhile, battery storage, distributed local generation, and electric cars are all have a major disruptive influence on the traditional utility market, leaving even more room for our smaller, more entrepreneurial clients to prosper. A big global market with major disruptive forces at work, clients who need and love our product. We are very confident that we can grow our royalty revenues at an average annual growth rate of 37% over the next 5 years. And I'd like to pass it back to Bernard so that he can explain how you can invest in this growth.
Thanks, Peter. We're currently in the process of listing on the TSX Venture Exchange and completing a concurrent financing. In terms of our current offering, we are doing a common share equity financing for $1 per common share. Please note that there is a $1,000 minimum subscription to participate. These shares will be free trading upon completion of our listing on the TSX Venture Exchange. We are raising up to $10 million and may increase the size depending on demand. The proceeds from the offering will be used to complete a number of royalty acquisitions which we have identified and are working through due diligence. The offering is eligible for registered plans such as RRSP, TFSA, and RESP. However, there are nuances if you are planning on contributing into versus investing from a registered account. Please contact us if you have further questions in that regard. In terms of dividends, our plan is to issue a dividend as soon as we have completed the identified royalty acquisitions. Please note that any dividend distribution will be subject to our board of directors' approval. In terms of timeline, we are targeting early August to complete the current financing round. We have submitted our application to list on the TSX Venture, and once we are approved by them, shares will be listed and tradable. To the TSX Venture, we currently estimate this process timing to be around mid to late August. We hope that you have found this webinar to be informative and useful. At RE Royalties, our goal is to build an innovative and forward-thinking company in the renewable energy industry that will, one, help our clients reach their full growth potential in building out the clean energy future, and two, for our shareholders to generate strong returns, a stable yield, high sustainable growth, and protection of capital. We thank you for taking the time to attend this webinar, and I will now pass it back to Jamie for any questions.
Hi everyone, thanks for joining the webinar, and you can check out the RER campaign on the Fund Funder main page, and from there you can jump into investing, and it should take as little as 12 minutes. Let us know if you have any questions. We'd be happy to help you out. Oh, we have a question from Charles in regards to the advantages of investing now versus after the shares are publicly trading. Bernard, do you have an answer for that?
Yes, I do. In terms of, I guess, the benefit of investing now is you're able to lock the price in. Obviously, once the shares become publicly traded, it will be subject to market variations. We do believe that there are a lot of positive factors which support a higher demand versus a limited supply. To reiterate that, once we come out and trading, approximately 55% of our existing shareholders who are long-term shareholders do not plan on selling the shares. Most of the financing that we have currently are working through, a large part of that commitment are also long-term investors that are looking for yield, growth, and capital protection. So they are buying and participating as early as possible to ensure that they are able to secure that proper pricing. And also in terms of management and the board of directors, we have a very long-term view. We are subject to escrow requirements by the TSX. So the benefits of investing now is really from a supply standpoint and available in terms of taking orders.
Bernard, but don't forget, there's also commission that needs to be paid if you buy it after the IPO, after the president's list.
Yeah. Sorry.
I guess one of the other points, Charles, to consider is at the moment our size makes us unavailable for many of the institutional investors who we've been talking to. And for many of them, that cutoff is a market cap in the $30 million range. We think this is a product that's ideally suited for institutions, long-term cash flows, long duration, matches many of the pension plans and Lifeco views on their liability side. So we think it is an ideal investment for them, and we do anticipate there will be interest once we cross that threshold.
Excellent. Great answer. Yeah. And we have another question in regards to where the current financial information is available. And that information is available in the offering memorandum located on the Fund Funder documents section. And there you'll see the audited financial statements as well as interim financial statements. And then we have another question in regards to investing in RSP and TFSA. Bernard, can you answer that question?
Sure. There are two different ways you can invest. One is you can buy the shares and contribute into the RRSP. The other way is you can actually invest from your RSP and registered accounts. In terms of registering from the registered accounts, how it works is that you will receive a publicly traded share, and basically it's the easiest way to explain that is you'll receive a publicly traded share and that will get deposited into your account.
Excellent, good answer. And I have another question in regards to, can you detail capital structure and the warrant position, Bernard?
Yeah, so currently in terms of the capital structure, we have approximately 15.7 million shares outstanding. We are raising approximately 10 million new shares. So that will give us to roughly 25.7 million. And then there's a 1.3 million share roll up into with the publicly CPC shell. So coming out of the gate upon completion of financing, we'll have 27 million common shares outstanding. There will be no debts on the books, so it's all equity. Everyone owns the same share structures, so there are no special voting or special structures. Each common share will be eligible for one vote in our annual AGM. In terms of warrants, we currently have 2 million warrants outstanding, and that's pretty much it. I hope that answers the question.
Great, yeah, and we have another question coming in asking if there's a prospectus available or if this investment is an exempt investment. There's an offering memorandum available, and that's on the Fund Funder main page under RE Royalties, and that's in the documents section, and this will be an exempt investment, and you can invest via Fund Funder on the main page by clicking Invest Now. And then we have another question here in regards to if there's a penalty for not completing listing on the TSXV, and I'll hand that off to Bernard to answer that one.
Sure. So in the event that we don't complete the TSXV, there are two options. We will either A, return the investment back to those that have subscribed, or B, we will find a different CPC partner that we can transact with. We have very high confidence with our CPC partner. They're very reputable, and they have been very professional in terms of our transaction today.
Great, great. And another question here in regards to operations. Bernard, is there a focus on certain types of projects?
Yeah, so in terms of our focus are primarily on operational projects that can provide a cash flow immediately. In terms of technology that we look at, generally we don't look at emerging technologies. We only look for commercially proven technologies that are well demonstrated, that we know it works, so that we don't take any technology risks.
Great, and another similar question here. What happens if your royalty investments go under?
Sure, and what we've done is we secure our royalty investments against actual assets. So if, for example, our second client is a publicly traded company, if that company were to run into difficulty, we have step-in rights to operate their projects, and we have security over their projects where our loan to security, we're covered about 10 times loan value on that project. So the good news is we're secured. The bad news is that I have to move to Europe to operate the projects.
Excellent. And another question in regards to your IRR. So your IRR is much higher than your target. Can you comment further on that?
So to date, our IRRs on the projects that we have accumulated is approximately 34%. Generally, we target between 15 to 20% as the range in terms of projects. We've been lucky, I'd like to say, but I think a lot of that comes down to the creativity that we provide our partners and potential clients. We definitely have projects currently in our pipeline that are much higher than our targeted amounts, but until we can execute and complete those, we aim to be conservative.
Yeah, and can you comment a little bit further on, I guess, your target and whether or not you believe it is achievable? As you did comment, it is conservative, but just a little bit more on the return on capital that you're targeting.
Yeah, and I think that falls back to the sort of complicated slide we had that showed how we plow the capital back in. If you like to think about it, when we do a short-term loan, we create a royalty structure. That royalty is kind of like the icing on the cake. So we make a decent return on the loan, and we have the icing on the cake. The fact that we get repaid that loan, and then we're able to reinvest it and create another royalty stream, with the same money means we're doubling the icing on the cake. And by the time we're through a 10-year period, we've tripled the icing. By the time we get to 20 years, we've done it by 7. And so that really is at the heart of it, the power of compounding, which is every one of us remembers is you multiply it by 72, and that's what gets you to the kind of returns that we're able to deliver.
Oh.
Peter really likes cake.
Watch it downstairs, I think. Okay.
So we have another question here in regards to your projects. So you have projects in Europe, the US, and Canada. How do you manage foreign exchange risk?
So in terms of the loans that we actually underwrite for our clients, they're all in Canadian dollars. So at the very basic level, we push that foreign exchange risk down to our clients. So again, it really comes down to how they see the best way of managing risk. So typically they may hedge it, or if they have a well traded currency, they obviously have confidence in that. We generally don't participate where there may be exotic currencies that are subject to currency controls. Most of our projects are either in Canadian dollars, US dollars, euros, Japanese yen, UK sterling. So usually major currencies are the ones that we transact in.
I think we've lost.
Great. So is that, I guess there's no other questions. Thanks.
I have a quick question. Sorry, I don't know how to send it in. Can you comment on whether this is available for only accredited investors, Bernard and Peter?
No, it's not. It's available to most investors. We are currently opened because of the offering memorandum. It is open to a much wider audience. That being said, there are some complications if you're investing from outside of Canada. If you're a US investor and you're non-accredited, unfortunately, we don't have the appropriate exemption for you. But if you're a Canadian investor, or if you're an international investor or US investor that is accredited, we have the appropriate exemption which allows you to invest.
And the other last question I have is, as someone who is an investor long-term in RER, if you could comment on what you've seen. You've had a comment about institutional interest, which I can vouch is very strong, because so many institutions want to have a renewable energy platform because they're not allowed to invest anymore in their mandates into fossil fuels, and other investments don't give a high return. But if you could comment on your experience with the retail market.
You want to take that one?
Sure, and I think part of the reason that we're part of the Responsible Investors Association is we are finding a strong retail interest in what we're offering, which is in essence an ability to invest in a portfolio of renewable energy projects across multiple jurisdictions and across multiple fuel types. In other words, an individual investor, if they wanted to invest in a renewable energy project in British Columbia, for example, they would have to wait. I think the current projections are it's going to be about 15 years before the demand for electricity in British Columbia requires another renewable project to be built as a result of the Site C project that's being built by the government. So an investor who is trying to invest specifically in British Columbia would have to wait a long time. The same thing can happen on Ontario, depending on what Rob Ford does. Our approach of saying we want to be across multiple jurisdictions so that we don't get stopped by any one particular political regime really enables that investor to treat us almost like an EFT or a mutual fund, where they've got a small piece of ownership in multiple projects across multiple jurisdictions. So it really does speak to the retail investor who at the moment has to try and pick a company that's got an interesting looking growth program, and so they're at risk that that company can deliver. We're basically a little bit more passive and much more wide reaching in terms of our prospects. So I hope that answers your question.
Yeah, and maybe to add to that as well, what we really look to do is diversification. Because the royalties generally, are a few percentages of revenues, we're able to reach that diversification point a lot quicker than, say, an operator or developer that will have to spend hundreds of millions of dollars just to, build one asset or two or three assets. We can actually do that with less capital. And also, because of the way that the royalty financing works, we get our capital back very quickly. If you look at a traditional solar park or a wind farm or run-of-river hydro, the capital payback on those projects, can be anywhere between 7 all the way up to 15 years before they actually get our money back or the original capital back. For us, because of our structure, we can get our capital back within 2 to 3 years, and that's really the target for us. I hope that answers that question.
Great. Yeah. So a question in regards to that in your portfolio, what type of returns have you generated to date from your portfolio?
To date, our existing portfolio is 34%.
Excellent. And in regards to your long-term goals, can you touch a little bit on that as well?
Sure. Currently, in terms of our long-term goals, the projects that we're targeting, again, is quite a diversified portfolio in solar, wind, hydro. So we only stay with renewables. The targeted is typically in the 15 to 20% range, depending on the type of project where it's located. But in terms of our existing pipeline, there are a few that we're currently looking at, which are above those targeted returns.
Great. Yeah. And how do you prioritize those projects? And do you have more than one on the go at one time?
So yes and yes. So we are a reasonably small team. So our ability to handle multiple deals is constrained by the fact that there's really just the three of us at the moment. That's one of the beauties of the royalty model, is that we don't need a large team. We are finding deal sourcing to be quite a bit easier than we imagined. The deals are basically walking through the door. In terms of how many we can handle at a time, I would say that sort of managing 3 to 4 is probably about right. And like with any kind of transaction, there's ebbs and flows on the work effort. And as we get closer to closing, as any of you who bought a house or bought anything, you know that as you get closer to the closing time, it becomes all encompassing. And so I think that is a challenge for us, is to balance that. But at the moment, we can balance about 3 to 4 investments at a time. And our time to close is also reasonably quick. Generally speaking, we can do our first blush due diligence in 1 to 2 months, and 3 to 4 months to close. Of course, always the papering of the documentation takes a little bit longer than you hope it would, but that's sort of our timing.
Mm-hmm. And when you're doing the due diligence, do you do facility tours before you close?
Yes, so we take advantage of a couple of things, but for sure we always get boots on the ground and go to site. So I'm being the guy who mostly goes to site. I particularly enjoy the ones in Southern Europe, but it's a process where we use third parties as well, because we need to have expertise on the ground. So we use local legal resources who are in country, because it's mission critical that we understand ownership of the land and all the rights to access the project. And then we also use local technical resources where possible, and supplemented with people that we'll bring in who we know from past experience. And again, the beauty of the royalty model is that our due diligence costs we're able to download to our clients. So that is they understand right from the get-go that that's a cost of our doing business, is that they pay for that original due diligence.
Yeah, and we have another question in regards to that. In regards to due diligence, what are some of the parameters you examine when you decide whether or not to take on a project?
Yeah. So in terms of looking at a project, there are a couple key criteria that we look at. First and foremost, capital protection. If we put money in, can we get it out? So typically we look at the quality of the asset. So that's where, from Peter's experience, the due diligence, the technical aspect, the legal, we want to make sure that it's a good asset, it's well built, all the commercial contracts are strong, and the projects are going to operate the way that they intend to for the next 20 years. The next thing we look at as well is in terms of cash flow. One of the very critical piece is timing to cash flow. We generally don't look at development projects or projects that have 2, 3, 4 years out before it starts paying cash. We look for projects that have the capability to pay effectively the minute we close the deal. So operational projects are ones that we do like. We also look at the risk-adjusted returns on each of this. So, where can we optimize for the benefit of our shareholders, but also for our clients? And we design usually structures that work for both.
Okay, so I would just add one thing to that. By looking at operational projects and particularly projects that have been up and running for 2 or 3 years, we don't take the technology risk involved in converting wind or sunlight into electricity, because we're not basing it on an engineer's estimate of what the plant might or should produce. What we look at is, what did the plant owner earn at the meter when they sold their electricity to the utility for the last 3 or 4 years? And that's the best gauge of how good the plant is how much money does it make versus what an engineering estimate of what it should make given a bunch of assumptions. So we really enjoy going to operational projects where it's really, how well is it operated? Are we covered for insurance, and are we covered for any kind of maintenance issues? And then how much money have they made selling electricity at the meter?
Yeah, so we have another question that came in. How do you explain what you do in simple terms to someone who has no idea about the financial or renewable energy industry?
Sure. Well, I'll take the first cut at it. And at the heart of it is, we believe that there is a gap in the ability of small companies to raise funds from traditional lenders or banks. So we are we're operating in a point in the marketplace where it's inefficient, because these individual companies that we deal with are too small to get a good deal from the banks, because the banks are only interested in lending at $100 million plus. So that's the essence of the market niche. We are operating in an industry that's growing by leaps and bounds, renewables across the world. So it's a huge growth industry, and as Bernard mentioned earlier, the costs have come to the point where it's more than competitive with fossil fuels. So there's lots and lots of opportunity, and so really our ability to create value for shareholders is essentially exploiting an underserved niche in a hugely growing market by being a partner with our clients.
I'll add to that and try to, I guess, synthesize it down to a simple concept. Essentially, I think I'm going to sort of take a statement that Peter made earlier. We're essentially a renewable energy ETF. And that's really, I think, the simplest way to describe it. An ETF is basically a basket or portfolio of different cash flow streams that come from, a specific industry. Our royalties are all top line, so they're based on revenue. So irrespective of whether a project is profitable or not, as long as it generates electricity, we continue to clip the cash flow stream off of those projects.
Great, yeah, and that simplifies it. We have a question here, and it correlates to a blog that Bernard actually posted a couple weeks ago. What inspired you to get into this field specifically?
Historically, my background is a financial background. I came from the mining industry, so I'm very familiar with royalty financing. The inspiration was really the birth of my kids a few years ago. I wanted to do something that will really help them, preserve not just for my kids, but the entire generation itself going forward, and really looking at it from a risk and a change perspective. What are some of the most substantial risks that their generation and their kids or my great grandkids and everyone else's around here will be facing, and it's really climate change. And I wanted to do something positive for that. I'm not an engineer, I'm not a scientist, but I know numbers, I know how financial markets work, and really this is sort of my way of giving back.
Yeah, and we have another question in regards to your strategy in regards to Aboriginal based projects. Do you currently have a strategy in regards to taking on Aboriginal based projects in this field?
Yes, we're actually very interested in working with different First Nations groups. We've actually been in contact and continue to have discussions with First Nation partners. Most of the time, First Nation partners do have an existing interest already in built out renewable energy projects, and they look to continue to grow their portfolio. We want to be a solution to that. We know that traditional lending sources are not always beneficial in terms of the way things are structured. We can structure 40-year royalties because we know that a run-of-river hydro project with a government-based utility goes for 40 years, and PPAs and so forth. So we have been in discussion with a few different First Nation groups here in BC, but also in Ontario, and that is a critical component of our growth and core strategy going forward.
Excellent. And we have a question here from another attendee. They're ready to invest, but their RIF is with Olympia Trust. So how would you suggest they proceed on their end?
Again, that's a very technical tax question, which I'll need to confirm with our tax advisors. But I do believe, sort of at a high level, it is possible. What I would suggest is to have the attendee or the representative from Olympia Trust contact me directly, and we will work to make sure that we can answer that question.
Thanks, Bernard. And we have another question from an attendee. For a high-skill investor who could have their pick of companies and projects to invest in, how would you convince them to invest in RER specifically?
So this is really where we differentiate ourselves as a royalty company from an operator. So if I wanted to, and I've been in the industry, the renewable industry for a long time, if I wanted to pick best-in-class renewable operator, I would invest in Brookfield or Interjax or another, probably market cap 3 billion plus type company. Their next growth is the result of building their next project. If they're out acquiring a project in today's marketplace, it's super competitive to buy and build a project. So they're not going to make great returns on that. And if they're developing a project, the average life cycle for a greenfield development, meaning you come up with the idea and you start doing the research and acquiring the land, is about 7 years. So that's the kind of time frame that one would expect to see the returns on. For ourselves, we're looking at projects that are immediately cash flow paying. And again, as we talked about, that diversified interest across multiple jurisdictions, multiple fuel types, means that an investor who comes into our company right now is participating in a very rapid growth that is sort of standard build one project every 3 or 4 year type utility play cannot generate for them. And the other thing that differentiates us is that ability to recycle the capital. If I'm a Brookfield and I buy one project, I put my $100 million down, I earn my 6 to 8% return on that $100 million for the next 20 years. we would say, give us that $100 million, we'll put it down once every 3 years, so 7 times in 20 years, and each time we invest it, we'll earn a 15% return. So we can really, really compound that return in a way that the larger scale guys just cannot do.
Yeah, so we have another question from an attendee. For a younger person that may not have as much money to invest, is there a minimum amount that one could contribute? And I can answer that one. So on Front Funder, the minimum investment amount for RE Royalties is $1,000. So as little as $1,000, you can become an investor in RE Royalties. And here we have another question for Bernard. Could you tell us about RER's governance and the experience and background of your board members?
Sure. Currently, with our existing board of directors, who will also be the directors on the publicly traded company. They're all experienced directors. They actually all have much more experience than I do in terms of corporate governance. 2 of the directors were original founding directors of a company called International Royalty Corp. That it was actually, it's now a company called Royal Gold, which is a very large royalty company in the resource space. Also, I'd like to add that all our directors are also independent of, I guess, myself and Peter. So obviously, we've built this company from a governance standpoint as a publicly traded company from day one. 2 of our directors also come from the renewable space. So they provide that added experience in helping us assess, review, and really make sure that we are in line with our investment policy. And then the remaining 2 come from a banking background. Jill, who is one of our independent directors as well, she was the former managing director of investment banking at TD.
I think, as Bernard also mentioned, we've also set up committee structures that are industry standard in terms of audit committee with an experienced and numerically astute audit chair. We have HR governance committee, and in terms of the whole terms of reference and the committee structure that we've set up, it's based on best practices for publicly traded companies.
Yeah. We have a compensation committee, an audit committee, and a governance nominating committee.
Thanks for that, Bernard. And we have a question in regards to your projects. Is there a project that would be considered too small to take on?
That's actually a really good question. We haven't found one yet that's too small. Obviously, I think for us, the size of the projects, the smallest one we've done to date was actually our first one, and the value of that was $1.2 million. We're definitely interested really more with regards to the partner. It's really not the size that really drives what we do, and really the same. We generally look at the vision of the partner, so we may be able to take one, even $500,000 in terms of size, if we can, understand the longer view of our partner.
I think in terms of sort of actual project size, in terms of megawatts, we're probably not going to compete on residential rooftop, but we do see an enormous market in industrial rooftop and community type infrastructure, where one project might support a community or a neighborhood network. So definitely we're really excited about that. What's in the jargon of the industry is called distributed generation, and we see just huge upside in that, specifically on the whole industrial rooftop. Every time I drive by a parking lot or a large warehouse, I just look at it and I think that's energy that should be being produced. And we've got lots and lots of our clients who are really excited about that space as well. So we're definitely pursuing those, what we would call smaller projects.
Thanks, you guys. And so we have another question here. You stated that you are currently undertaking a raise of $10 million, but the Front Funder page has a goal of $2 million. how do you plan to raise the additional $8 million?
That's a good question, and I'm glad that actually came up. So currently, in terms of our commitments, we have roughly about $7.5 million committed. So we're working through that in terms of reaching our goal. I hope that answers that question.
And I guess front funder is part of it, but not the absolute control. We're looking to front funder to help us bring our message to those investors who want to invest $1,000, whereas we know that we're talking to investors, we're personally talking to investors who want to bring much bigger amounts, but we really are looking to front funder to be the platform to allow us to access the retail investor who's got a little smaller numbers to play with.
Yeah, and just to clarify that, as an accredited investor, you can also invest through Front Funder, and you can invest any amount you want in as little as 12 minutes. So not only retail investors can invest through Front Funder. If you're an accredited investor, you can jump on Front Funder, you can look at the OM, and you can invest in as little as 12 minutes and sign the sub-docs straight on our platform. And we have another question from an attendee. Do you have a list of strategies that you apply overall, or do you come up with a different strategy plan per project?
That's a great question. Generally, what we do is we look at it through the lens of our investment criteria. I briefly touched on it in terms of making sure capital is protected, quick to cash flow, proven technologies, making sure that we can generate a good risk-adjusted return. Generally, those criteria are the ones that really drive how we view individual projects. And then once we do look at potential project opportunities, they tend to differ a little bit here and there. Not all projects are the same. There are, a project in BC is very much different from a project in Alberta, and it's very much different from a project in Ontario or in Europe so generally we start with that high level lens, whether it checks the major boxes when we look at a project, and then we start narrowing it down and really going deep on the due diligence aspect to make sure that each of the projects can actually support the overarching goals.
Thanks, Bernard. And also, how does RER set yourself apart from other companies that may be doing the same thing?
Yeah. So fortunately for us, no one's doing the same thing, but we do anticipate that as we become more successful, that there will be other companies that will adopt the same strategy, and the royalty structure. There's, it's not something that can be patented or so. And we definitely welcome competition because it does make us better. But I think what I like, again, going back to the earlier presentation, the renewable energy industry is extremely large, and it continues to grow year over year. If we can capture, 1% of 1%, that in itself is $220 million worth of existing projects. So the numbers are large, the industries continue to grow. And then really one of our key advantages is that we've been doing this for 2 years now. So from a reputation-wise, from an experience-wise, we're 2 years ahead of any company that intends on starting and emulating what we do. So we do have some certain advantages, and we definitely welcome competition in that regard.
Great. And then another question just came in. Do you think operating out of Vancouver BC, in a province that values renewable clean energy, it gives you a leg up?
I think it does, in a sense that there are an awful lot of early adopters of renewable energy development in British Columbia. So we've got access to a tremendous group of experts, if you like, for any kind of renewable project that we're looking at, be it solar, wind, run-of-river. There's somebody in British Columbia who's built one. So that is definitely advantageous to us. And I think it is advantageous to you know, to be in a province where we've got a carbon tax, where we are in this province speaking with that same impact orientation for many things. So I think it is good for us to be housed here.
Yeah, the other aspect from the royalty side, there's actually a lot of royalty companies that operate out of Vancouver. So companies like Wheaton Precious Metals, which is in the resource space, A&W Royalties, again, another royalty company. I think they're based out of North Shore, Diversified Royalties. So the royalty expertise in Vancouver are also quite deep. Again, that really helps us in that regards to combine really the best of what some of that core experience, especially from a management team standpoint, and also from an investor standpoint.
Thanks, you guys. And we have another question that came in. Oh, it's a comment. With a team like this, you guys can't lose from an attendee. Nice. I like the enthusiasm. If there's any other questions, please feel free to jump into the Q&A right now or the chat, or just hop onto your mic. If not, I'm sure the team at RER would be happy to answer any questions via email. And his contact information for Bernard is located right on the slide there. Otherwise, you can jump on the Front Funder platform and look at the offering document and some of the slides available there as well. And also, you can make an investment in as little as 12 minutes, and the entire investment process is available on the Front Funder platform. And thanks everyone for attending.
Thank you everyone for your time.
Yes, thank you.